Good evening and welcome to the Oak Bloke YouTube channel. So I'm going to be talking about Augmentum Fintech, which is written an article about that this evening on my Substack, which is theoakbloke.substack.com, and basically just kind of looking at this is the share we're going to be talking about. So you can buy it for 75p. Sell it for 72.8 earlier on today. If we just go and have a quick look, I think it was by about here that it was down into sort of 67p. I think it was a 68p, 68.5p buy that I managed to do. And I mean, you have to go back to kind of here to the depths of COVID when things were looking very, very grim indeed, to buy this at this price. And I think this bit here was the that was the November 23 crash, I think. So, or mini crash. It wasn't a real crash. Anyway, so this is made up of various different holdings. They're listed here. So, I mean, if we just zoom in on that a little bit, so you've got Tide is the biggest single holding. Obviously, cash is cash. So there's just about 19p of cash. So what you're buying for 74-ish, 75p, about a quarter of it is cash to start with. Okay. Tide then adds 35.7p, so that gets you to 55, and then Zopa adds 23p, gets you to 78. So even just the top two holdings basically cover the price of the share. And if we go and have a look at this is this is basically the percentage of NAV and what the NAV was going back to the days of COVID. I just basically worked through five years of annual reports to work all of this out. So back here, and these are the top five. So Tide being the top one of the five, if you follow me. So back here, Tide, for example, was worth 9 million, and the NAV in total was, or at least the NAV, the NAV was 77 million. Now there have been some, I think there have been some follow-on funding rounds that this isn't just that it doubled from here to here. I think this was partly that they had a secondary fundraise. But nevertheless, you'll see that whilst not all of this is organic growth, if we actually just go and look at the individual holding here, I mean, Tide, for example, has grown from 9 million to nearly 60 million, and down here, I mean, just to kind of, this is probably a more relevant. So this was the based upon the percentage and based upon the NAV. The valuation was 175 million pounds back here. Today it's 1.2 billion. So it's grown by about sixfold, and that based upon a 5.1% ownership. Okay, is where we get to that 60 million. So 5.1% of that number there is that number there. In fact, what I'm doing is I'm taking that number there by the percentage to get the implied valuation of 1.17 billion. Okay. Similarly, in fact, this graph shows you the same thing. So Tide being the orange line here, that's the 6 times. So we've also got Zopa. Again, Zopa has grown a similar amount, so 146 to 1.15. Looks less impressive here on this chart. Not really sure why, but that yeah, that growth level there is actually more impressive. I suppose it's yeah, I suppose this one started at a higher level. I don't know. Anyway, uh, that's um, that's grown very strongly as well. And then even Volt, which which I've put in the problem child area of my growth chart. Nevertheless, has grown 6 times, and Bullion Vault has doubled. Grover. Um, has you can see here it sort of reached a peak here in 23 and then dropped back since. So this is the one that's kind of got to here and then moved downwards. So bit of a mixed bag, and I cover this in this here, where I sort of split them out into this is what you would call the Boston Consulting Group, portfolio management, and I'm sort of assigning these as the star players. So and that's based upon how the NAV has grown. All of these, by the way, the green means that the NAV grew between March and September last year. And you can see some of them have grown by quite good amounts. I mean, that one's up 40%, 10%, 15%. That one's well, sorry, that's the original cost. That's the value there. From there to there is about 10%, and then Tide has increased, about 18% period to period. So all looking very good. Obviously, Grover's a disappointment. That's fallen quite a bit. Gemini's fallen a little bit, and Volt, you can see, is not sort of hasn't decreased but hasn't increased particularly either, nor has Zopa actually period to period. But if you go backwards, then certainly over those 5 years they have grown. This as well is in my article. So what I'm doing is I'm taking the discount as it was back in September. Here I've basically included the buybacks. So the current shares are 167 million. Back at 30th September last year, they were 169. So they've bought back about 2 million shares. About just over 1% of the shares have been bought back. And if you were to continue to buy back shares, that would sort of put it on about a 60% discount, and you'd end up with the NAV growing from this estimated number here, £1.64, which is 163.7. So you can see here it's grown by about a penny from the buybacks, and this, by the way, doesn't include any increase in valuation since September last year, because obviously that valuation number there is 6 months old, but we don't have a more up-to-date one yet. But yeah, you would get sort of a 14 pence upside um, if you used all the cash to buy back more shares. So as you can see, I mean, there's several billion dollar uh, um, holdings. So that's kind of a little bit about those. So what I do in this article is just get into the what's happening with them. So Tide's quite exciting in the sense that it's large in the UK, and it's a bit of an interesting one, because it's a sort of I mean, they sometimes say Tide Bank, but they're not a bank. They don't have a banking license. They basically work with a third party banking provider, but they've got a large section of small businesses, okay, about 10% of businesses, and that's in the UK, but also they're growing very fast in India. I've written several articles, and the numbers have gone 200,000, 300,000, 350,000, and in this article, I'm saying 500,000 customers in India. So, and that's over the course of about a year. So, They've doubled their India footprint in a year, and they've also grown or growing in Germany. We don't have numbers as to how many customers, but that that's another growth market, and also that they're looking to grow to other European countries. So they'll probably be Benelux and the Nordics and different territories during 2025. So plenty of runway to growth. And when you look at obviously 10% market share in the UK is great. That's all positive. But when you look at the size of the so 500,000, up from 225, so it's over double actually. But 500,000 out of 63 million micro businesses. And interestingly, one of the things that Tide are doing is targeting female entrepreneurs in India, which there's some that's quite an interesting area, because obviously uh, uh, India does have a very entrepreneurial culture, but I don't think have really targeted a female audience for that's just not something the Indian banks themselves have done to my knowledge. So that's quite interesting. And again, Germany, 2.2 million micro businesses. So again, opportunity there to grow. So that's the last accounts that we know of, and you can see that they're obviously they made an operating loss, but that was part of growth. They tell us that they're profitable in the UK, so it's the Indian business that needed to scale, German business that needed to scale. So you'd kind of think that 2024 now will be, as you can see there, the gross profit is pretty spectacular. And interestingly, I mean, this is kind of like a SaaS business, software as a service business, where essentially what they're doing is they're charging customers. Well, free means that you get sort of X number of transactions and so on and so on. But then if you go for sort of these higher level packages, then you get the account software, you get the payroll software, you get so you get all the little bells and whistles that come with the cashback or the pro account. So the idea is to get as many of these up to the £50 a month. And that is why they're making those sorts of margins, because as I say, they're not actually doing any of the banking. They're agency, so where they're providing the service, and then a service provider is actually providing the actual banking service. So this is very much a software company, even though it says that it's a bank. So 85% margin, which is pretty good, pretty good. And I sort of talked about £25 a month would be um, £25 a month on 300, would be 300 million revenue, 255 gross profit margin. Now, obviously, that's now 1.5 million, so we'd be talking 450 million revenue, and then at 85%, that would be 370 gross profit. So you can imagine even just that moving has moved that by over 100 million. So this administrative expense, 144 million, you can kind of see how that is not going to be too much of a problem for if they're able to kind of hit that sort of midway, sort of that level on average for each one of their 1.5 million customers. And obviously, I don't know that with any certainty because we don't have the accounts yet, but you can kind of see a pathway through where they can you would imagine that they can get to profitability. And also, of course, that administrative expense probably contains quite a lot of R&D and build out of stuff that once it's built, it's built. Okay, so that's Tide. So really like Tide. That seems a very decent business. Zopa's award winning. It's loan provider of the year, credit card provider of the year. 5 billion of deposits. So it's also got one of the highest ISAs, cash ISA rates, and recently just moved into the buy now, pay later. So it's done a funding round a couple of weeks ago, and AUGM was party in that. We don't know by how much, but we'll find that out perhaps in the next update from from Augmentum. They've also done a deal with John Lewis Money, so that extends. Now, when you consider Zopa has 1.3 million customers and John Lewis slash Waitrose has 23 million customers, well, that could lead to a little bit of expansion for Zopa. And then also 6.8 million with Octopus. And what Octopus are doing is, do you want solar panels for your roof? Do you want to have a, what are they called? A heat pump? You know, the different green loans essentially. So Zopa will do the loaning. Octopus will provide the green energy gadgets, and off you go. You know, so that's kind of another partnership that they've struck, and they've got others as well. Tesco, I think, have got a partnership with Zopa and different things. Oh, excuse me. So yeah, as I say, you know, again, very interesting business. It was also profitable last year. Fastest growing digital bank. To turn a profit, or the fastest to reach profitability. So it moved to 15.8 million profit in the last accounts. Yeah, just all the numbers are growing fast. It's all looking quite good. It's not identical to Tide. It's much more, you know, I mean, Zopa is a bank and does have a banking license, so it's a uh, and also it's interesting that when some of the other banks are sort of moving out of Canary Wharf, that Zopa are moving in. So that was also a bit of news that and that's quite recent. That was in March as well. Volt's interesting in the sense that they are working with payment on rails. So this is where rather than using a credit card to handle a payment, that they can handle a payment bank to bank. So it's sort of like direct payments, avoiding the payment rails of Visa, Mastercard, and Amex. So could be a very disruptive technology. Could be. It's also got into this whole let's work with stablecoin and work with those that want to move real money to crypto money and back again. So this what they call on ramp, off ramp, with connecting the crypto world with the real one. If you're mad enough to go spending money investing into crypto gambling, then that's how to, you know, that's essentially what Volt can help you do. And yeah, you can probably tell that I'm no fan of crypto, but yeah, look, at the end of the day, if it's going to be a thing, I mean, I don't know that Bitcoin specifically will be, but I could see how some sort of blockchain technology could work in the future. But you know, there's thousands and thousands of cryptocurrencies, so best way of playing it is picks and shovels, and just whichever one succeeds. You know, if they're using Volt as the on ramp, off ramp, then Volt can make some money out of that. So that's hence the phrase "can't beat them, join them." So anyway, you know, would Volt get bought out at some point? It's possible. You know, there's a history of that kind of thing when someone threatens the duopoly of these guys, that they get bought out. So if that were to happen, that would again be an upside. Grover's kind of quite difficult to get my head around that one. That's essentially where, rather than buying a gadget, that you rent it, and you kind of more or less pay the same as you would pay for buying it in X months of renting it. So Bit of a strange one. I don't know that that many people would do that, but some must, some do. And that's kind of, I suppose, the advantage of doing that is that you're not then tied into paying the capital up front. You're not tied into obviously being stuck with something that maybe you don't use. If you just want something, I don't know, like a camera, and you want to have a go at digital cameras for 3 months and then send it back, that's the idea, that you can rent it rather than buying it, so you don't have the cost of, well, tying up your money, and then also the whole sort of having to sell something. You just send it back to Grover. They tell us that they're at break even. They tell us that they needed extra capital to grow, so that's all positive. They got 500,000 customers, which is a lot of customers. So yeah, but in the last results, they did say, um, that they've done a downwards valuation. So jury's out on that one. That's the one that I've actually classified as a dog in my Boston consulting group. Bullion Vault is probably doesn't need that much explanation. It's gold and silver, and you can buy gold and silver and platinum and precious metals. So it's basically a website where you can do those things, buy those things, and they physically hold the metals, the precious metals for you. And yeah, you it's a way that you can invest into actual bullion. So um, actually quite a nice business, pays quite a good dividend, quite obviously quite topical at the moment with gold and silver prices being where they are. So yeah, quite a nice little holding. It's what I classified as a cash cow. Gemini. So Gemini is obviously, Gemini means twins, and the Winklevoss twins, famous for that film featuring the guy from Facebook. Uh, they own most of Gemini. Obviously, Augmentum own a little bit of it as well. And this is, again, it's buying, selling crypto. They're based in US. They've got various certifications. They're a electric money institution, licensed business. They uh, also expanded that to the UK, so and also to Australia. They run the Bitcoin ETF in Australia. So again, if you can't beat them, join them. Uh, Sell them the picks and the shovels. So that's that one. XYB, interesting, is a software for banking for banks. Allegedly runs HSBC's retail banking. Augmentum own 20% of XYB. They say that they've got various customers. They've got a tier one global bank and a tier one bank that's presumably not global. And so yeah, there's not a huge amount of news about them. But they're focused on delivery. They're building out their technology. So could well be interesting. Very similar to the Starling. If you know or have watched my video on Chrysalis and their holding Starling, have and do something similar to this, to XYB. Anyfin is it's kind of like credit check um, company that cover these territories: Sweden, Finland, Norway, Germany, expanded across Europe. 1 million people have downloaded their app, and they basically do sort of credit updates, but also allow you to refinance your debts, to consolidate your debts into, and offer you some budgeting tools, that kind of thing. So again, quite an interesting idea, I think. Intellis is a hedge fund in the FX space, so it uses AI to buy and sell foreign currency, and is working on improving that. Reached profitability, and it's well positioned for significant growth. So I call that one of the stars. So significant profitability and significant growth sounds like that's where it belongs. iWalker is the last one. So this one, again, it's very active in the loans to businesses, so providing working capital, that kind of thing, has demonstrated growth and profitability. Top 10 fintechs. Um, I don't think anybody really sort of gives it, it doesn't sort of get the same level of prominence that these others do get. So it's interesting. iWalker, if that's how you pronounce it. But yeah, it's well funded. It's 62% growth. These are not bad figures. Anyway, so I've talked about this bit, the progression. So you've seen that and how it's when these companies, and obviously I've only mapped the top 5, and maybe I should have gone back and done the other 5 to do the whole top 10, because I suspect that we would get something similar where most of these have gone up. So iWalker um, and so on, Intellis and so on, have sort of moved upwards as well in terms of valuation. So yeah, there's a little bit of news post period, which was Full Circle. There was another piece of news, and I wrote an article about this, about Farewell and how that was sold off to Castle Now, and Castle Now own the funeral company called Grums. Yeah, one of them anyway. That might be worth just quickly showing you. If I let's just grab, let's have a think. It was called this article here. Yes. So Farewell and Give Me a Cuddle. So yeah, this is yeah, Dignity. So they own Dignity Funerals, doing a swap. So the synergy being that Farewell is a way that people can leave money in their will to charities and to different organizations, and obviously great synergy with a funeral director. So that's what Castle Now do. And I looked at over the next 10 years, 1 trillion of inheritance will pass between generations, all in one financial legal services platform, death and after death services, wills, probates, cremation, funeral plans. Will writing is ripe for digital disruption. Dusty solicitors' offices and reams of paper get torn up and replaced with algorithms and AI assistant and lots of automation. So yeah, when I looked at this, I thought actually this is quite a good little company. So you can see I kind of worked through the performance of it, and yeah, quite liked it. So owning, yeah, it was highly leveraged. So there was that, and it did lose some money back here, and yeah, I think overall, I quite liked it actually. And yes, I did see that there could be some synergy with yeah, that. A little baffled why Castle Now is valued 1% below NAV when its principal holding earned nearly 40 million profit and is undergoing a turnaround. If that can cut costs and create a standard operating system, yeah. So, and then there was some other holdings that I didn't like so much, but the Dignity was the big part of that group, I think. So that was the majority. Yeah. Anyway, back to this. So um, yeah, I think that probably draws it to a conclusion. I think the the conclusion then was that when you look at these top 10, I mean, most of them are doing very well, very well indeed. Some of them are jury's out. Grover I'm a little bit skeptical of, but obviously it managed to increase through 2021, 22, 23 and just lost its way. So they say that the extra money will turn it around. So we just wait and see on that one. Bullion Vault, I mean, I've put it as a cash cow rather than as a high growth, but I mean, at the moment, with gold prices being where they are, I mean, why shouldn't it grow fast? It's probably a little bit unfair to call it a cash cow. But anyway, that's what I did. I kind of wanted to segment them into where I saw the top 10. So, when you say, well, there's 6 out of 10 that are star player holdings in the top 10, and those make up 2 times the share price, including cash. I mean, it takes some getting your head round really as to why this is as cheap as it is. And perhaps the other thing that I said here is that, well, the share price here at the depths of COVID is kind of on a par with where it is post Liberation Day. But I mean, like this was a far more serious situation, I think, than where we find ourselves today. I mean, um, pretty much like none of these companies are subject to any tariffs. Not a single one, in actual fact. I think. Um, I mean, the only one possibly would be Bullion Vault. If you sent gold and silver to the US, that maybe they'll stick 10% tariff on it. I don't know, but pretty much all of these are just untouched by tariffs, and even if there is a recession, which at the moment there's not, and there's no guarantee that there will be. Um, will any of these, or will all of these, be affected to the extent of the depths of COVID? I kind of don't see that. I think that's very, very mispriced actually. So yeah, and look at the NAV back there and look at the NAV today. It obviously it's had a little bit of a downwards bit by here, but I mean pretty much nothing. So it's got a very, very good track record, yet sits at a 60% discount, which I think's a bit crazy. And the final thing there is when you actually look at the increases of those holdings um, between that year and that year, making a comparison to 2020 is wrong in the sense that these 5 holdings are now sort of, you know, 4 times more than they were back then. So anyway, that kind of covers everything that I was going to talk about. So hope that's been useful. That covers Augmentum Fintech. None of this is advice. It's just me talking about this share. I I do ask people, if you have enjoyed this video and this article, that you would consider helping Emmaus. I'm raising funds for Emmaus. Emmaus gives a hand up, not a handout, for people that are homeless or that are between homes, and just basically gives people it's more than a roof over their head, in the sense that they become colleagues in that organization, and they give back in the sense that each of the Emmaus uh, 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 properties has a business attached to them. So the idea is that they work in those businesses, and that might be a furniture shop, a coffee shop, that kind of thing. So it's not just about sort of giving a handout. It's actually just helping expand that service, and also helping the people that, yes, they get a roof over their head, yes, they work in that business and earn some money for themselves, but what Emmaus will also do is help them do some training, help them get their driving license, help them do things that will get them back up on their feet and able to not need Emmaus. And I like that about a charity, that they're not creating dependency, they're creating independence, and I think that's really important. And obviously the people that are being helped are helping the organization as well. So there's a bit of a virtuous circle to that. So yeah, look, I mean, 109 have helped. Really would be very appreciative if you'd help as well. If you already have, if you're one of the 109, then don't feel you need to do anything more. But if you're not and you've enjoyed this video, please do consider helping. Really appreciate that. Just click the give now, and it's just giving, and do what you can. Anyway, Oak Bloke signing off. That's all from me. Cheerio for now. Thank you very much for watching. Bye bye.